Welcome to MarketSnap's daily market rundown. One name moved 14% today and stole the spotlight, but the broader market still sent a clear message. We're unpacking SanDisk first, then the session's bigger themes. It was a classic, good news is bad news kind of day. Except the news wasn't even that good. The June jobs report came in way below expectations, with only 57,000 jobs added versus the 115,000 that was forecast. But here's the twist. Markets actually liked it. Why? Because a weaker labor market takes the pressure off the Fed to keep hiking. The Dow surged over 250 points to a fresh all-time high, while the S&P 500 was basically flat. The Nasdaq, however, got crushed, dropping nearly 1% as the tech rotation we've been talking about finally hit full force. Let's look at the scoreboard. The Dow Jones Industrial Average closed at 52,900, up a solid 1.1%. The S&P 500 finished essentially unchanged at 7,483. The Nasdaq Composite fell 0.8% to 25,032, and the Russell 2000 slipped 0.5% to 2,996. The VIX, or fear gauge, dropped to 16.15, suggesting the selling wasn't panic-driven. Now, the big story today was the semiconductor massacre. This was brutal. SanDisk cratered 14%, KLA Corporation plunged 11.5%, and Lam Research dropped over 10%. Corning, Teradyne, and Seagate all fell double digits. The sell-off was broad and deep, hitting names that had run up massively over the past year. This looks like profit-taking ahead of the long holiday weekend, but there's also a growing narrative that the AI trade is getting crowded and some of these valuations are stretched. On the flip side, the beneficiaries of this rotation were the defensive and quality names. Apple jumped nearly 5%, breaking out to new highs. AstraZeneca gained 6%, Vertex Pharmaceuticals rose 6%, and Intuitive Surgical added nearly 6%. S&P Global and Moody's also had strong days, up about 6% and 5% respectively. This is the market telling you that when tech gets hit, money flows into names with predictable earnings and strong balance sheets. Among the most active names, Tesla was a standout, and not in a good way. Shares tumbled over 7% despite beating delivery estimates. The market is clearly worried about margins and the ongoing price war. Micron also got hit, falling 5.5%, continuing its pullback from recent highs. On the positive side, Netflix gained nearly 5%, and Palantir rose almost 3%, showing that not all tech is being sold indiscriminately. Looking at sector performance over the past week, the rotation is clear. Communication services is up nearly 5%, healthcare has gained 4.4%, and technology is up almost 8% for the week despite today's pullback. The laggards are energy, down 0.7%, and basic materials, down 0.5%. This is a market that's still betting on AI and innovation, but it's becoming more selective. Looking ahead to next week, we've got some interesting earnings on tap. General Mills reports on Wednesday, and Constellation Brands just beat estimates this week. FactSet Research is also reporting Wednesday, and we'll get Nike's results on Tuesday. Keep an eye on those consumer names. They'll tell us a lot about how the economy is really doing under the surface. You can find exclusive earnings transcript summaries on MarketSnap. One more thing to watch. The bond market is starting to signal that inflation may have peaked. The 10-year yield dipped today, and the market is now pricing in a higher probability of a Fed pause. New Fed Chair Kevin Warsh is keeping his cards close to his chest, but the data is starting to move in a direction that could be favorable for risk assets. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this breakdown useful, hit that like button and subscribe. We'll be back after the holiday weekend with more analysis, including exclusive SWOT breakdowns on the names that matter most to your portfolio. Until then, stay sharp and keep building that wealth.